Hey everybody, welcome. It's Pete. Welcome to Stocks for Breakfast. Today is Thursday, March 19th, 2020. Today I'm going to give you a strategy that is, in my opinion, it's worked for me for a long, long time for active short-term trading. If you know anything about my background, I've spoken about it a few times. When I first started trading way back in 2000, we literally only used level 2 charts and 1-minute line charts. So we're basically just trading in that super micro time frame. As you get to become a better trader, as you become a more experienced trader, you'll realize that there's a little bit bigger picture out there, and those micro time frames are a part of a bigger move. And you want to use those micro time frames to get involved in a bigger picture move. So what we're going to do today is we're going to use candlesticks in multiple time frames and how that sets up day trades. I want to touch on two things briefly. If you find these videos helpful, it would mean a lot to me if you click down and subscribe. You'll get updates. That would be great. I want to discuss briefly whether or not you should be actively day trading right now. And I also want to read an email from somebody named Peter, happens to have the same name as me, that I think is really relevant to everybody right now, which really, I think what he wrote, I'm not going to read the whole thing, but what he wrote really drills home the difference between reading charts and being a trader. And that's my number one goal, is helping you move from being a chart reader who can read patterns and setups and all that kind of stuff, and making the leap to somebody who understands the chart patterns are only a part of what we do. They're not where the money comes from. Because if you think about it, we can all enter a trade at exactly the same place and then have 50 different scenarios if 50 different people enter at the same number. So it's what I specialize in is what happens after that. So you have understanding how to read order flow and set up great trades, and understanding reading the tape with profit potential and reward and justifying risk. But then there's making those decisions after you get in the trade that make the difference between making $500 on a trade and making $5,000 on a trade. I know that's a big number, but I did that to dramatize it. We all know if you've been trading at all, if you've placed more than 3 months worth of trades, you know that there are trades that you got out of and you say, oh my gosh, what did I do? Why did I get out there? That's kind of what we're going to talk a little bit today. But more importantly, I want to inspire you to think about that after you enter a trade. Now, if you do all the work you're supposed to do, and hopefully you're picking up all these pieces from me and how to build a good argument, if you do what you're supposed to do after you get into a trade, you'll understand there's so many decisions that go into, do I get out now or do I add now? And that's a big part of it, right? So I'm going to touch briefly on just one thing that Peter said in his email. It says, I had a list of names that closed strong and names that closed weak. When we rallied, I wanted to go long. So that's the first part. And the second one was Apple did look strong as I felt it held with the SPY tanking. Then when we got back inside and above the open range, the continuation was awesome. So here's the point that I want to get across here. It's not the specifics of the chart of the stocks that he was talking about. It was the fact that he had, if this happens, then I'm doing this. The market is strong, I'm going to look for my strong stocks. If the market was weak, then I'm going to look for my weak stocks. A monster trade mistake that keeps people poor is buying weak stocks or shorting strong stocks, saying, here come, I know it's turning over. I know it's turning over. Prior to the coronavirus, plenty of active day traders were trying to pick a top, and it just kept drifting higher. The trend was up. Don't fight the trend, which is what we're going to talk about in the next section here. I'm going to go to the intraday charts and show you how to go bar by bar, higher time frame, lower time frame, and you could use this as a really raw strategy to determine if you want to be long or short in the most immediate moment, which is what we're trading in right now, right? We're not calling any swing trades. We're not calling any investments. Everybody and their grandmother is calling right now to say, what should I do? Which stock should I buy? And really right now, I'm not saying anything to anybody because I'm not doing it. Right now, it's day trading environment. We're going to jump into the day trading charts right now. The last part I want to touch on before we get into charts, which thank gosh, we don't have any major news overnight. The futures are kind of fluctuating back and forth. We'll take a look at that in a second. If you can't get a read on the market right now, if you're sitting at your screen actively day trading all day, every day, step aside if you can't get a read. There's nothing wrong with choosing the right fights. And if this market right now happens to have you a little confused, There's nothing wrong with preserving your capital. You're not getting paid by the hour. You're getting paid to allocate money when you feel like you have an edge and conviction in the profit potential based on the trade you set up, and it justifies the risk. So there's nothing wrong if the market's a little confusing to you right now, especially on a day trading aspect where it's back and forth, and you're like, my gosh, I'm buying high, I'm selling low, I'm getting hammered every trade. Step aside. There's nothing wrong with that. Preserve your capital for when the market reaches a point where you feel like you have control over again. You only want to be involved in the market when you have control. All right, so Peter, thank you for that email. I hope that helped a bunch of people today. So what we're going to do is we're going to go over to the charts, and we're going to take a look at that strategy I was discussing. But first, we're going to take a look at the heat map of the S&P 500. You can see there are a couple of pockets of opportunity. Cisco actually closed positive yesterday by 4.5%. It actually has earnings tomorrow. And I guess the way the internet's working right now, Cisco and a lot of these online meeting type companies are really getting a big boost. And obviously Cisco does networking, and Oracle that powers all of that kind of stuff. For obvious reasons, Amazon and Walmart. So you can see there's very small pockets of opportunities. Stuff to do. There's not a question there's stuff to do, but again, pick the right fights. So what we're going to do is we're going to just briefly take a look and see where the market is. If you've been following the videos, you'll know that yesterday we were looking for this 2380 level to hold, it did for a little bit. Right out of the gate it held, and we had a rally, and I really thought that we were going to explode up higher at that point. And we actually wrote in yesterday's Smart Money Alerts that watch out for the stampede if the bulls come back, because we actually hit that level bounce. You can see a few days in a row. And now, ironically, we're right back to that number. And I guess not really so much ironically, because it is what it is, right? That is the level that matters right now. For whatever reason, we keep floating back to that level. But at least we're getting some buying that's bringing the market back. Again, it could be short covering. If you're not sure what short covering is, that means it's a fast rally after a downtrend, which is people getting out of shorts. It's not necessarily new buying. New buying happens after a rally and we go sideways. Short covering usually comes right back down. So what we're going to do is we're going to go right back into the charts. I'm going to review a couple of different stocks, but I'd like to start with the SPY because it's pretty clean. You can see which stock we're looking at up here. This is the SPY. I don't have it in the middle of the chart right now just because it'll get in the way of the candlesticks. But what I want to talk about again is we've been using the opening price. We've been using yesterday's high, yesterday's low. So this technically here would have been the previous day's low. And that would have been the reference level. Now, you know, I usually use where the meat of the candlestick is. I want to put the candlestick where it actually traded most and significant reference points. Okay, so I'm going to actually get that out of the way for now just because I want to draw some very clear lines in here. Now, a couple of days ago, I actually went over the hourly charts, and yep, a lot of people use the hourly charts. My friend Rob Smith is probably one of the most popular contributors out there who really made it a big part of his system. He didn't invent it, but he certainly has been one of the people that has mastered it, that's for sure. So again, what we're going to do is, and actually I want to come back to the screen because I want to bring a very important point up. If there's anything you learn about trading that matters the most, is higher time frames dominate. If you remember the book that I showed you a couple of days ago, I think I posted in the link on Tuesday, if I'm not mistaken, in the description. Higher time frames dominate, and that simply means that more money is committed over time to make a stock move up or down. So if a stock is trending, a lot of money was committed, assuming the stock has regular daily volume, a lot of money was committed to move that stock in that direction, either up or down. So you should write that down, have that on a posted pad. Higher time frames dominate. Then you go down to your lower time frames to fine tune your entries. Then you go back to your higher time frames to manage those winning trades, because then you're going to look for those same signals of well bid, well offered, indecision type candlesticks on the higher time frames to determine when you should be exiting a winning trade. So I want to get back to this chart because I don't want to take up too much of your time this morning. I'm sure everybody's got a lot of planning to do, both for coronavirus, getting life back to normal, and setting up some trades. So I'm going to go through some of the charts here, but what I want to discuss is simply using higher time frame charts to determine well bid or well offered. So you can actually see here in the SPY the first hour. Now, this is actually from 9:30 to 10 o'clock. The first hour, the next one here starts. Oh, this is, I'm sorry, on TradingView, the first hour actually is an hour. The first hour was here, and then the next candle was an inside candle. So you can make a decision there. Now you have a bunch of decisions to make. Okay, we're above the opening price, we're inside yesterday's trading range, and we have an inside candle. Do I even place a trade? Should I actually be long or short? Well, we know the longer term picture right now is definitely short, so that would be the higher time frame trades. We actually said we're looking for 2380 to hold, so that's another scenario. We got above that 2380, but the 2380 was in the middle of a downtrend. So you have a decision to make now. You have the two higher time frames telling us that within the first hour and a half of the day, the market is neutral, so to speak. Even though we're above the opening price, that could have been where you took some shorter time frame trade. So then we go down to the lower time frames, and we see that there's indecision candles here. Here's the first 15 minutes, the first 45 minutes, right? These are 15-minute candles. So we have well bid over the first 45 minutes of the day. So you can choose to use the hourly candle. You can choose to use the 15-minute candle. I do not recommend going down to the 5-minute candle or less unless you really want to be trading hyper activity. So what we're looking to do is we're looking for pure price action regardless of the longer term trend, but I'm going to add that into the if this, then, right? So we already said the hourly candle, as we've said in a couple of recent videos, you can use that as a standalone for using that as a trend. So let's just say, for argument's sake, the first hour you were using that. Then you go down to the 15-minute chart for confirmation. So you got the first 15-minute candle here. Next one becomes well bid. So if you were looking to bid that 2380 level that I mentioned in yesterday's video, you have all green for the opening hour, short time frame well bid, short time frame well bid. Then you could even drop down further and say if you wanted to enter, you would then look for entries while that hourly candle was green, while the 15-minute candle was well bid, and you were above the open. And you actually got the entry candlestick here, which was an inside candlestick breakout for a quick spike to the upside, which actually now I want to come back to the screen and just talk about that for a second. You need to know prior to the trade, if you get into a trade, am I trading with the order flow or against the order flow? And is it with shorter term order flow or longer term order flow? In this case, we know if we're buying stock, if we're getting long, know the lingo, we're buying long against the downtrend, which is the big momentum that's going on right now, obviously, right? That means that your trade management should be a little bit tighter and you should be a little greedier with booking your profits because you're trading against that longer term trend. Now, if you're short selling in this market, obviously the longer term pressure right now, which longer term is the last month and is vicious to the downside, you could be a little bit more aggressive. And aggressive means multiple positions, more share size, and hold longer. So when you have this thought process in mind, okay, I'm getting long against this longer term downtrend, that means that I should be managing the trade. The first sign of weakness, I should be moving up my trailing profits. If the market rolls over and can't make a new high, then I'm going to start to look for short sales again. If the short sales are in play, which are the better short sales. And I'm going to go to the screen of what that looks like right now. So we have all these possibilities during the day, and you can see I ended up drawing this trend line. What we were actually looking for a trend line break here where we held the opening price support, we held the low, and myself and my buddy John were actually looking at this, and we kind of looked at this shorter time frame, and then we went out to the 15, and we actually said, okay, we held the lows here, and we had this giant candle. Now we're looking for it to break through, and it didn't. It did not. So we actually had a failed test there. Now we were able to actually draw a downtrend line. I extended this as the day unfolded, but we drew a downtrend line here. So now you have to say to yourself, what's the next best trade based on today's price action? And again, I'm not predicting anything. I'm just adding the pieces together, right? This is our job as tape readers. So we know the long-term picture is going on to the downside. The high of the day failed. Now we'll go back out to the 60-minute chart and see what's happening. Now we have a red candlestick that's an inside candlestick. So we have a bearish candlestick, but neutral because it's inside. Now you have a decision to make. We failed at the highs in the last hour, which in this case here was 10:30 to 11:30. Failed and pushed to the downside. Now you need to make a decision. What's the best trade I could make now? So if we go back to Peter's video, email at the beginning where he made money yesterday, the stock was actually Gilead, if I'm not mistaken. He decided to trade a stock based on the most recent price action, which is what we are right now. That's what I'm trying to show you is we're not trading so much where the support level from February. That doesn't matter right now. I'm trying to get you focused in on making if-then decisions, so you feel confident you have control. So as the day unfolded yesterday, we made a decision that we failed and we're starting to see well offered now. We went from inside candle to well offered on the higher time frames. This is the 15, right? So the point that I want to get across here is, once we started, we couldn't get across this trend line because we drew the trend line here, and this was the stage where I was like, okay, we got them. If the bulls are going to come back in, I need to get above this level. So we actually got long in this area here, bounced, and when we kind of just kept drifting sideways here, I actually posted in our private Slack group, I said, I'm taking off half of my position right now because I'm uncomfortable. We should have broke that level and didn't, and we're actually getting down to test the opening price now. The stop loss was below the low in the opening price, which is kind of in the same area. I could have always put the trade back on if we rally, but look, our job is risk managers. Don't try and prove yourself right or wrong. So we actually broke down. We took the full stop loss here. But here's the point that I want. My coffee's kicking in right now. This is the point that I want to get across right now. The best trade of the day, as the day unfolded, adding all of the pieces of the tape, reading the tape, putting the argument together, was this one. This trade right here, even though it wasn't a monster move to the downside, which is still relative, right? That was basically a $5 move. And I'll tell you why. We had all of these tries to the upside. We failed. Now we have a solid move to the downside. You could have shorted here where it closed below the opening price and closed below the low, assuming you came into the day saying, I'm only looking for shorts and I want to take the best shorts. This short sale here would have been the initial one, right? Because you actually now had confirmation because you closed below that level. You just didn't dip below and have a sell stop and get in immediately because it got below that level. That's a big thing in this market too. Wait for confirmation, and confirmation in this sense means a close. It could be a close on the 5, the 15, the hourly, whatever time frame you're comfortable with. That would be the first entry. But this trade here, where we pushed down, rallied, held the opening price and the previous low as resistance, and then we formed a swing high looking for the sell short. And the entry point on the swing high would have been this inside candle breakdown. So the low of this candle here was, how come I can't see it? 233.78 was the low. And then we pushed down and got a bullish U-turn here. And you would have tightened up your trailing stop in that area, which was around 229. So pretty decent move there, $4 without that much stress. And when I say without that much stress, because it was a trade that was really where you put the pieces together. So just for argument's sake, let's actually go in and take a look at Facebook and do the same sort of analysis really quick. And you can see in Facebook, there really wasn't the same type of push and pull and clear move to the downside. But you can definitely see, if we start out on the higher time frame, you can see very clearly 1 hour green, 1 hour red, 1 hour green, 1 hour red. So Facebook was kind of a mess. Let me take that back. Kind of a mess as far as there wasn't clear buying or selling in charge. As far as a trend, we could see it was moving in one direction or the other to make the same kind of decision that we made in the SPY. The SPY kept making lower highs. So in my terminology, that means failed test of the high, and that's a potential change of trend to look in the other direction. And then you get the confirmation when we went below the open. Facebook, and again, we talked about this previously, the more trades you can stay out of that are low probability follow through, that have no edge, you immediately become a better trader. This did not have that. If you wanted to, for argument's sake, you could have used the hourly chart to be looking for trades to take immediately during that hour. Now, that's really hard to do, where you're getting long, you're getting short, you're getting long, you're getting short. But what is that also telling you? It's also telling you that the stock has inside candlesticks, can't decide if it wants to be a higher or lower. The only positive to what you could have been looking at in Facebook yesterday was it was above the opening price for the majority of the day. And if you use that micro time frame, then you could have went down to the lower time frames. And when I say micro time frame, I mean today's order flow, meaning is it above or below the opening price, and only look for buy signals if it was above the opening price. But because the hourly candlesticks were all jammed together, and there was nothing was well bid, well offered, there was no continuity from green candle to green candle, you probably would have stayed away from this because there wasn't any fluidity. So you see how you could have made decisions, but then you get to the point where you say, well, it's probably not a good decision, right? So let's go to let's go to Tesla, because Tesla is obviously a stock that's in the news pretty much every single day, right? So let's just draw the opening price in Tesla. And you can see that Tesla immediately, actually, this is kind of cool. Here's the previous day's low in Tesla, and we're going to keep drilling this home. And I'm getting some really good feedback from people that they're actually starting to draw the high, the low, the opening price, the opening range. And it's making clarity, which is really exciting because there's nothing more powerful for you. And I hope I could give that to you. That's like one of my biggest goals, is to give you clarity so you look at something. And again, I've said this before, if you could look at a trade and say, I don't see anything, that is awesome, because that means that you have a system. That means that you're looking for something specific as opposed to you're just looking for a trade. So why am I excited about what's going on in Tesla here? Because if you're looking at the previous day's high and low, like I'm teaching you to do as a part of your tape reading skills, you can see Tesla immediately opened up at the previous day's low. And then what would you be looking for? You'd be looking to see if it holds, in this case, would now be resistance to look for your next trade. So on the 15-minute chart here at Tesla, it actually rallied, held the previous day's low, and then you'd be looking for a short sale. So you actually got an inside candlestick here. So in my terminology, if we were looking at, if we were trading together in a room, I'd say, okay, got up to the previous day's low and failed, got up to the previous day's low and failed. That's why I don't draw the lines at the exact price, because I want to know what price matters. That's probably the best way to describe it. We got up there, we failed. We got up there and failed. Okay, what happened there? We can't get above there and stay there. So not a shock that we get an inside candlestick breakdown. So let's drop that down to the lower time frames and actually see what that looked like on the shorter time frames. So you can see here, this is where we actually had the inside candlestick breakdown. We punched through and failed, punched through and failed, punched through and failed, and another inside candlestick. Now you have a choice of, like what I said before when we were looking at the SPY, I believe it was. We have an inside candlestick breakdown here, but it's above the opening price, but it's also below yesterday's low. If you came into the day saying, I wanted to short Tesla, you technically could put this on with less shares, and again, managing risk in exchange for reward to get a head start on a good trade. This inside candlestick breakdown did not have a lot of profit potential. So again, look at the magnet that the opening price is. If you learn anything from tape reading about me, whether it's the intraday, the daily candle, the weekly candle, monthly, quarterly, use that opening price signal to get a bearing on whether or not you want to be long or short. And I get some feedback from people, tape reading is different this way. And I'll say, you've been doing it all along. It's your entry price. You've been reading the tape the whole time. You just didn't put it in the context of this, right? What we're trying to do is have a reference point before you get into the trade. So if you put the short sale on here, again, completely knowing you have the opening price and it's going to probably come in and jam it up, right? Which it actually does. So is that the best entry? Probably not, but really what's your downside? You have a small risk to today's high in exchange for if we end up having to push to the downside. But let's say you didn't. The next move is we finally, after a half an hour here, finally crack the opening price and trade below. But now you have today's low right there. If you wanted to, you could put that on, because now the market itself, again, relative strength, relative weakness, the market's also pushing down now. So at this point, because the market's pushing down, you have confirmation from the stock, in this case, Tesla trading below the opening price, and the market slowly breaking down. Now the market at that point was still above the opening price, but the stock could move prior to it, no big deal, right? So let's say you put the initial piece on here. Now you're looking for a spot to add, right? So what would that be? It would either be a swing high or an inside candlestick breakdown, right? We actually get an inside candlestick here and get another one here. Neither one of them triggers, so you don't do anything. Tesla rallies back to your entry price, which is here, and then we get a bearish U-turn, kind of similar to what we get here, but this one's more significant because this is after a move, and that's where the most powerful U-turns happen. And guess what? It happens right at the opening price. We bounce up, bearish U-turn, and pull back down. Now, if you missed this entry, and didn't have this entry, you have a super clean inside candlestick breakdown here, pushes down, pauses, rolls down, and you get a really nice push. Now, when would you book this profit? Well, then we said before, you go back to your higher time frames to look to see if something changes. And you can see right here, before we got this 45 minutes of well-bid candlestick, we actually had a indecision candle that was also what they call a hammer. So the higher time frame changed in the direction of that move to the downside. You had one here, but this is really the one that we were just talking about. That was the actual turnaround to look to book a profit, where you actually had, actually this is pretty good here. We had inside candlestick on the 15. So if you didn't catch those other ones, you could have took the 15. Then you had well offered, well offered, well offered, well offered, well offered. And if you really know my strategy, if you go back to saturation points, you know there's different trade management between the first 3 candlesticks and the next 3 or 4 candlesticks, completely different. And we'll talk about that in a different video. So hopefully you can see, it's you know, I can you can tell I get kind of excited because I love to to teach, because I understand how hard trading can be, which is actually what I get asked by a lot of people. Why do you teach this? And it's because trading's hard. And I want to help. It's hard. There's so many people that can do this that get frustrated. And it's really just a question of being smart. But being smart means you have parameters of understanding how to read the tape and make that jump from chart reader to tape reader. And I'm sure if you're like me, you have hundreds of notes and books and charts that you printed out and said, I don't understand. Why didn't this bull flag follow through? Because that's only a part of this. That's part of what we do. The real part of making money is when you jump from a chart reader, and become a trader. So I thought it would be kind of cool today to give you a whole bunch of simple scenario, a whole bunch simple, right? That doesn't make sense, like jumbo shrimp. Whole bunch of simple scenarios to read the market with today, from bar to bar, from hourly chart to yesterday's high, yesterday's low, 15-minute opening price, market breaking down, which stocks are breaking down, market find support, which stocks found support and cannot buy. Like Peter mentioned, he made some good money yesterday when he was trading Gilead, and that's awesome to see. So I'm going to sign off now. If you find this video helpful, please subscribe. It would mean the world to me. If you have any questions, absolutely click below and leave a comment. I'll be more than happy. I'll also leave my email in the description. You could always shoot me an email too if you don't feel like you might want to post it publicly. But absolutely do. Put yourself out there. If you got a question and you want to learn, don't be afraid. Ask a question, because everybody's got different learning curves, different experience levels. Ask that question and we'll see what we can do to give you a hand. Have a great day, everybody. It is March 19th, 2020. Let's go make some money today.